Today was supposed to be a heck of a day, and turns out it was a heck of a day. Before I jump into the video, guys, I want us to take 2 seconds of silence for all the paper handies who sold around $57, all right, because they thought we were crashing. All right, well, guys, today was supposed to be a heck of a day, okay? A lot of volatility because this was a quadruple witching day. Thinking about a witchcraft day. Yes, because this looked more like a warfield battle than actually trading a stock in the stock market. I mean, guys, think about it. We knew it wasn't going to be easy, especially today, because even when we jumped at 65 at the opening bell, you know, I was kind of, as always, I'm really hyped and I expect for the best, but also I'm prepared for the worst, all right? And you know, this, when we dipped to 57, I didn't blink. I didn't blink because it will come right back up, but not maybe to 60 because, guys, multiple times in my last videos, I mentioned why there is a huge manipulation below $60. Like, the hedges are trying really hard to keep this below $60. I already made tons of videos on this on the past 2-3 days explaining this, and you've seen this again today. All right, just looking at the option chain, guys, between $60 and 65, we had about 250,000 additional call options that will end in the money if we closed at $65. They knew it because 250,000 contracts of calls means an additional 25 million shares. Exactly. 25 million shares that will need to be covered. All right. Well, they couldn't let that happen, but they doubled down. How do I know that? Well, Stock Grid, our new secret power, our new secret tool, you know, that is allowing us to have real data on the dark pool activity. They thought they had us by using dark pools, but well, thanks to Stock Grid, now we can have that same information. Well, look, yesterday this was below 400 million shares. All right, we were about $21 billion in terms of dollar amount that are being short sold in the dark pools. Well, today it jumped to $26 billion. So an additional $5 billion were thrown at the market on AMC in order to make this fall below $60. Okay, but it doesn't really matter. You know why? Because of this, we still have 411 and 12,000 contracts expired in the money. That means 41 million shares. But here's the catch, guys. Not all of these 41 million shares needs to be bought because personally, I believe between $40 and possibly 45, 46, maybe the hedges, the market makers selling these calls already bought the underlying shares, covering the ass from the risk. But it doesn't matter because there's still going to be a huge volume coming in next week. Not maybe to the extent it would have been if we close at 65, but still we may expect another jump thanks to this, you know, delta hedging from the market maker. So not maybe a gamma squeeze to the full extent we were hoping, but at least we can see another huge volume coming into next week. All right, guys, so nothing has changed. They haven't covered. As a matter of fact, they are paying even more interest on this because they double down not only on the interest but also on the margins, okay? Because there is no way you can short sell an amount of shares even higher than the actual float of the company. It doesn't make any sense. It doesn't make any sense if it's not through dirty tricks, synthetic shares. All right, so enjoy the weekend, guys. Okay, we still won, and next week we come back hard and we get to fight and get closer to Tandy land. All right, guys.